Assalamualaikum and hi, my name is Muhammad Rafiq Yuzuddin bin Ismail and I'm a General Manager for Booster High Cafe.
For background and history, Booster Cafe has been established for almost 20 years. Our cafe is partnership and consists 4 members that have their own roles and position for this cafe, which are General Manager, Administrative Manager, Financial Manager, and Marketing Manager. Also, we recruit 3 employees to help us in selling smoothie and organizing a cafe. This cafe located at Shop Lot around Ahmadiyah Mall and the first one smoothie cafe in this area. Description of products. At our cafe, we serve various types of smoothies and each of smoothie have their own nutrient and uniqueness. Example, detox smoothies are good for people that doing diet or look for their health, and fruit or meat smoothie base are suitable for children. All ingredients that we use for our smoothies are fresh and we will buy new stock on weekly basis. The range for our smoothies are around RM6 to RM12. For packaging, we make our own packaging with our logo on it. It will become the boost for our customer to start their daily activity.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Alif Imran bin Muhammad Fisal and I am the Administrative Manager of Booster High Cafe. I would like to talk about two things regarding the product of Booster High Cafe. First, I would like to talk about the market description of the product. For the market description, the product can be categorized into two types, which is a health product and as a dairy product. For the health product, based on a report that was made by the Food Industry Asia (FIA) and a research firm known as IGD, around 99% of Malaysians are interested in trying to maintain a healthy diet, and they are always trying to find a way to improve their food intake. Um, this is because nutrition is considered as one of the key or important factors that affects the product choice among the Malaysian consumers. And based on the study that was made by the Food Industry Asia and IGD, around 88% of the companies around that involve food and beverages are currently trying to reformulate their products to meet the demand, and while the other 12% of companies are considering to reformulate their products so that they can have a better and nutritious food product. For the dairy products, around to successfully satisfy the demand of the domestic demand for dairy products in Malaysia, the dairy products are needed to be imported from various countries. In the year 1970, the import value of dairy products was around 69 million ringgit, and it has increased to around 1.2 billion in the year 2014. Even with the increase of milk production in Malaysia over the past 4 decades, the demand of dairy by the population is still unable to be met. Between the year 1990 and 2005, the consumption of fresh whole milk has increased by 33% from the 32.9 kg per capita to 43.5 kg per capita. Next, I would like to talk about the competition faced by the company Booster High Cafe. One of the competitors for Booster High Cafe is a company known as Boost Juice Bar. There are several other smoothie brands that can be found throughout Malaysia in the various shop outlets and shopping malls. Through observation, we can various strengths and weaknesses of these big brand smoothie companies can be identified. Now, I would like to talk about the strengths of our competitors. The strength of the competitors lies in their ginormous distribution channels and the variety of flavors that are offered at their outlets. At these various outlets can be found almost anywhere at their shopping malls, or they have their own shop lot. Even at one shopping mall, more than one outlet can be found on the different levels and areas of the shopping mall building. At each of the outlets, the menu offered there is extensive and This is due to the massive amount of ingredients that are available to them, and thus resulting in various combinations can be made to create new and interesting flavors that are able to draw in the customer's curiosity, thus resulting in a purchase. But even if with strengths, each company will have their own weaknesses. Uh, it can be seen through the cost taken by the outlet's owner to maintain the various equipment and to purchase the ingredients needed. That is one of the weaknesses of our competitors. For each of the outlets, they are given the right to use the name of the companies after the owner bought the rights, and they must follow the guidelines that are stated by the companies. However, the expenditure is all from the owner of the outlet himself and the profit gained. For every purchase and payment of bills and repairs, the money used to pay for those are used from either the owners themselves or the profit gained from selling the smoothies at the outlets.
Hi, my name is Siti Asma Binti Yasmin. I am as marketing manager of this cafe.
For the marketing strategy, Booster High Cafe have marketed our product from a short-lot area, Amajaya Mall, which established a high reputation as well as known for only one smoothie shop there. Booster High Cafe also participate food festival demonstration program by making a booth. So, Booster Hut Cafe can take this opportunity to introduce our smoothie flavors available as well as our cafe which is near to Amanjaya. Booster Hut also make a promotion on buy one cup, free one cup smoothie for our customer. Poster and banner also been distributed to our customer in Sungai Petani area, which is stressed on the specialty of our smoothie so that customer will realize our existence easily. Our Booster Hut also make a social media whereby manage our Instagram account which is Booster Hut Cafe Smoothie and Facebook ads on Yummy Smoothie as a medium to introduce a new flavors of our smoothie available in the cafe. For the manufacturing plants, Booster Hut Cafe use an equipment and raw material that approved by Food and Agriculture Product on Research and Development R&D and Health Department so that our smoothie product is safe and not harmful to our customers. In order to fulfill our smoothie product satisfied with our customer demand, Booster Hut Cafe will produce a low-calorie and high-nutrients smoothie to ensure our customer health. Equipment that we use is a high-speed mixer that can crush ice and fruit easily. We use a fresh ingredients, raw material, or fruits and vegetables. With Booster Hut Cafe, we choose a good fruits and vegetable and keep it in refrigerator to avoid any damage. And we'll buy another stock of raw material on a weekly basis. Lastly, for the manufacturing plants, Booster Hut also make a contract of agreement with Farm Fresh Corporation in order to get a milk fresh from factory, as well as to avoid damages on expiration date because milk is a product that easily damaged. Booster High need a fresh milk or yogurt so that our smoothie will be more creamy.
Hello, my name is Nur Shuhada Sazli binti Abdulaziz. I'm as a financial manager of this cafe. So, as a financial manager, my responsibility is I produce financial reports and create strategy for this cafe long-term financial goals. Well, I show you our income statement. For our net sale for last year, we get 600,000, and our cost of goods sold we got 450,000 ringgit. Our cost of goods sold is includes ingredients, packaging material, and labels of the product. Then we less the net sale and cost of goods sold, we get a gross profit. Next, we calculate the operating expenses. Our expenses includes labor, utilities, insurance, sale promotion, delivery and transportation, and miscellaneous. And the total of our expenses is 64,100. Then after we less the gross profit and expenses, we get the net income before tax, which is 85,900, and we less with the another tax, and we get the net income after tax, we get 78,350. Next, we calculate our cash flow analysis. Our cash flow analysis is a financial statement that show how change in balance sheet account and income affect cash, and break the analysis down to operating, investing, and financial activity. As I show you, we calculate the cash flow analysis from January to December, and we calculate our revenue, expenses that be stated in income statement, include a cost of goods sold, and we less the revenue and expenses, we get the total cash flow. It was 85,900. Next, we talk about our balance sheet. Balance sheet is to give interest parties an idea of this business financial position, in addition to the play about what this cafe owns and owns. For our balance sheet, our current asset include cash, account receivable, inventory, and prepaid expenses, which is the total is 17,000. And next, our fixed asset include improvement, furniture and fixtures, equipment, real estate, buildings, and other fees, which the total that we get is 75,500. And then we less with accumulated depreciation, which is 50,000, and we got the total is 60,500. And we calculate the total current asset and the fixed asset, we got the total asset is 77,500. Next, we calculate our liabilities, which is account payable, which 40,000, and long-term liability, mortgage payable, 50,500, which our total liability is 55,500. And next, we calculate our owner equity, which is common stock and retained earning, and the total that we calculate is 20,000, and we add the liability and the owner equity, we got 77,500. Okay, now we talk about our financial ratio. We take a 4 financial ratio that we calculate for this year financial ratio. First is inventory turnover, second current ratio, third quick ratio, and the last is debt to equity. Inventory turnover measure how many times a business inventory is sold and replaced over a given period. V is a cost of goods sold divided by inventory, like 450,000 divided 4,500, so we get a 100 times. Next, our current ratio, we use current asset divide current liability, which 70,000 divide 14,000, and we get a 0.43. And for our quick ratio, we use a current asset minus inventory divide current liabilities, which are 70,000 minus 4,500 divide 14,000, so we get a 0.31. And last, debt to equity. Debt to equity is calculate the weight of total debt and financial liabilities against owner equity. And we get a long-term debt divided by owner equities, like 50,500 divide 20,000, and we get a 0.78. For our current ratio, it actually measures a business ability to pay off short-term liability with current asset, as well as a quick ratio measure a business ability to pay off short-term liability with liquid asset. Okay, lastly, we talk about our contingency plans. There are three our contingency plans for the business. First is revenues asset projection. A severe rise in sales over expectation will allow us the chance to increase our marketing expenditure over the 20% allowed. Yearly, we will be able to employ the communication manager, and we will be able to provide additional facility and add an extra location probably. Next, our revenues miss projection. For this possibility, we have to be prepared. We actually have to redouble our marketing effort if we accept our forecast. The risk in this scenario is that declining spending, particularly marketing expenditure, is the first reaction to missing prediction. Okay, for this, we have to get our advertising out to the target, and if we stop investing on ads, we cannot do it. Additional capital infusion can become required, and the business strategy outlines the probability in depth. Last, our internet side of business plays a research role. As wireless networking price and hardware costs continue to decline, our consumer may not be able to pay for internet access or booster high cafe membership. We will need to turn our attention to drinks and pastry products if this situation materializes, maybe even offering daily style lunch. Our internet service will still play a significant role in recruiting consumers. In the situation, we will only have to charge less and shift our numbers around to certify this pattern.